Good morning, everybody. In a bit of a rush this morning, getting all the headlines updated in time. A bit of trading going on as well, trying to spin those plates as always. Hope you're all doing well this fine morning, and lots of things going on this morning too. Got a bit of a break up in gold, as you can see there on the chart. Hasn't looked back since that break of the prior highs around that 29.55 area. And now it's gone through 3,000 pretty easily as well. So sky's the limit for the old shiny stuff. Right, let's get stuck into it. Tons of headlines to get through. Let's stick it on a dollar yen chart as well. We've had the first round Shinto announcement, wages from Rengo, the big union over there. They say they've achieved a 5.46% average pay rise. It was demanded at 6.09%, so it's come in a little bit lower than that, but above last year at 5.28%. Base pay, the union says they've achieved 3.84%. 4.51% was demanded. Last year was 3.70%. So again, not hitting what was demanded, but still marginally higher over last year. The Nikkei, which is obviously the one of the main Japanese press outlets, they've spun their headline that the wage deal was higher than last year, but there's cases for both sides of this one. They didn't achieve, or wages thus far haven't achieved what has been demanded, whereas last year we got what was demanded, and in some cases over what was demanded. So we have come in south of that, but it is an improvement over last year. What it means for the government and the Bank of Japan in terms of monetary policy, they are, as much as they want to see wage growth, they are wanting that secondary bonus of getting wages in the positive when you take inflation into account, so real wages in the positive. So overall, it's good news. They've got higher pay deals than last year, not excessive. As long as that trend continues, they'll be reasonably happy with that, though if it starts pulling back over the next few years and wage deals get smaller and smaller, that's potentially going to become an issue. Does it scream that the Bank of Japan are going to hike next week? No, it doesn't. But again, this is only the first round, and we'll see what some of the other unions, particularly small businesses and whatnot, do with pay deals. That could be a bit of a clincher, particularly for the yen. If the smaller businesses don't get wages up to decent levels, that's going to put a bit of pressure on, because those small businesses account for a huge chunk of the workforce outside of these big unions. Right, moving on from that, UK PM Starmer still sticking with the pragmatic approach to tariffs, saying that negotiation is the best way to respond to US tariffs. He also says he's going to be convening an international leaders meeting on Ukraine again on Saturday. Not good news for his nibs. We had some data out this morning, GDP data, first data of the new year, and we've come in with GDP at minus 0.1%, where we're expected to rise a whopping 0.1%. Year-on-year GDP also dipping to 1% from 1.5% prior. Industrial production, manufacturing production, construction output, all a sea of red, so not good news for him right now, and he faces more problems because apparently over half of the cabinet, his cabinet, is calling on the Chancellor to rethink her spending cuts, which are touted for the 26th when we get the spring budget. Anyway, that data hasn't done much for Bank of England rate expectations. Swaps pricing in 56 basis points of cuts by the end of the year. That's only up 2 pips from before that data, so no real change there. Germany, SPD leader Merz is spinning the wheel about all the talks that we had yesterday over the financial package, saying that failure of getting the financial package through would cause a loss of reputation for Germany. He said we have to do something to significantly improve our defensibility and do it fast. Says we have changed our proposal on the infrastructure fund to also include climate protection measures. This is trying to pacify the Greens. And he said that he proposed to meet the Greens' demands to expand the scope of defence to include civil defence and intelligence funding. However, after he came out with that lot, the parliamentary leader for the Greens said, "We do not trust a word Merz says." Anyway, German press reported, though, late last night that Merz had said that negotiations are on a very good track. So this is an underlying theme to the euro. This is one of the reasons why we saw the rally in the euro, this big spend or fund creation by Germany. And if it's not going to happen, we're likely to see the euro washing out a bit on that. But looks like the market is taking the line that it's not going to be a straight line to an agreement. The Greens are going to push for their concessions, and when they get it, everything will be fine and dandy, taking aside what the AfD are still up to. ECB's Vilroy says, or he calls the current US policy a tragedy for the American economy. He's the Bank of France governor, and this is the bloke whose country had 1.1% growth in 2024, while the US had 2.8%. Perhaps he should worry about where the tragedy lies for whose economy. PPI data from the US yesterday even, came in a bit similar to CPI data, came in less than expected. PPI headline coming in at 3.2, a pip lower than expected. The prior month was revised up. Core also coming in 2 less than expected. Again, a high revision to last month. However, some of the components within the PCE that feed in from PPI that feed into PCE came in higher. There's some calls that core PCE will be rising 2.8% from the prior reading of 2.6%. So still looking sticky on that front, on the inflation front. Barclays, they've jiggled around their rate expectations for the Fed. They expect the Fed now to deliver 2 25 pip cuts in June and September. That was versus their prior forecast of 1 cut in June. Business Insider was out with a piece overnight saying that the Fed are going to ratchet up their hawkish stance and raise their inflation forecast. And if they do that, that's going to be a much more hawkish tilt. Galaxy saying 2.8 was under Biden. US very different now. That this rate will have negative this year. I'm not so sure, mate. I wouldn't get too caught up in everything that's going on at the moment. A lot of people still thinking that tariffs will bring inflation, which it may do in the short term. Whether it's a long-term outlook remains to be seen. But it all depends. It can all swing. Everyone's getting a bit negative over the US and what Trump's up to. But if all this leads to deals, then the risk comes out the economy, and you find stocks probably going back to all-time highs. Yeah, I'm not saying you're saying airlines less than 50% demand. Yeah, that could be a factor of higher prices anyway. I'm not ruling out that there's issues or we're going to see issues, mate. But I think it all depends. If we get deals on all these tariffs and everything, and that falls away off the radar, then I think markets get more positive again. But we shall see. We shall see. Right, where was I? We've had the can kicked again on the US shutdown after Senate Minority Leader Schumer said he would vote to keep the government open and prevent a shutdown. This can needs a bit of recycling. It's been kicked so much over the years. President Trump is another reason why Francis Vilroy will have the hump, because Trump decided he's going to place a 200% tariff on all wines and champagnes and alcoholic products coming out of France and other EU represented countries. He seems to think that also champagne is made in the US, which is not. They make fizzy grape juice the same as everyone else. Unless you're in Champagne, the region itself, you cannot call fizzy wine champagne. EU's von der Leyen has taken a slightly softer approach now. She's open to negotiations with the US on tariffs. EU Trade Commissioner says he's going to have a call with his US counterpart today. US Secretary of State Rubio, speaking about Mexico, saying we have seen a level of cooperation from Mexican authorities that's never been seen before. But currently it's not enough. It says there's not enough progress on the issue of drug trafficking, and drugs keep entering the US. The numbers have not varied. You wouldn't know that there's anything negative going on in those comments if you're looking at dollar MEX, which I'll do so shortly, because that has been down, testing the big 20 level. Oh, look, gold's coming off a bit, typical. So have a quick look at that. Where are we? I don't know if there's been a headline out. Let me have a quick look around what's going on. No, I can't see anything off the top of my bat. It's typical because I did try a little short at 99, which I then stopped myself out for $2 after it broke 3K, and now it's gone $10 in the green again. Oh well, shit happens. Right, back to the headlines. Treasury Secretary Bessent says that he is sure that Trump is hoping to get the tax bill coming in the coming weeks. If you want something, we're discussing this in the chat room, if you want something that's going to potentially put a floor in stocks, it will be a big tax cutting bill coming through quicker than expected, which Bessent seems to indicate. That might be a bit of a boon for stocks and at least stop the rot. And as that goes back to our conversation, also Galaxy, things like that can change the sentiment on the US economy as well. We've still got a load of Ukraine stuff going on, and a surprising headline came out yesterday that I thought might see risk rallying quite significant. Putin came out saying we agreed to stop fighting in Ukraine, but that it must lead to long-standing peace. This was reported by a lot of the wires. An instant headline where he agreed to stop fighting in Ukraine. You think that would have seen risk rally, but when you go and read or go and listen to the piece directly, what he's saying is that he would agree to peace pretty much straight away as long as their conditions are met. And those conditions pretty much haven't changed since the ones he gave to Biden. So they've got a ton of conditions, and they're not likely to be adhered to by everyone else. He says if there is a ceasefire, it's unclear how the situation will develop in the Kursk region and elsewhere. He's talking about being able to police a ceasefire across some 2,000 kilometres of front line. He says if Russia and US agree on energy cooperation, a gas pipeline could be provided for Europe. Within that conversation, and he was talking alongside Belarus leader, he was saying that if things calm down, he would offer more gas to Europe and basically go back to the way it was, which isn't going to work as far as everyone else is concerned at the moment. So the ball is still in Russia's court. There's obviously been the back and forth between Russia and Ukraine. Zelensky saying that he's setting himself up to say no to any ceasefire, or Putin set himself up to say no to any ceasefire. Talks are going to be ongoing over the weekend, it seems, from Starmer, other European leaders. So I think we've got a bit of weekend risk, headline risk to look out for this weekend. Obviously further headlines on that front, and obviously whatever Trump decides to tweet from the toilet over the weekend. So if you are looking again for just a little bit of a reason why stocks might rally, keep an eye on the close tonight. If we're still down here, you might see a few shorts running to the exit door late in the US day, just squaring up a bit ahead of that weekend risk. But we've got a whole day in the US to get through yet before we look at that. Right, that's pretty much it on the headline front. There's obviously been a ton more to and fro with Canada and tariffs, and they're going to do this, and if that doesn't happen, we're going to do that. I'm getting bored listing all the headlines out unless it's anything significant that's moved prices. I'm not going to bother posting them anymore. Right, so let's get in. So, oh, gold's still going. Look at that. Where are we? Lost it. Gold. So we have had this break up. Okay, now we've had a bit of a failure. Maybe some sellers are coming in and saying, I haven't seen any clear headlines as to why that might have just dropped out. But you know, if sellers decided they want to hit it, they want to hit it. Or maybe we haven't just hit any stops up there in particular. 29.80 is your first level of interest below this 3K mark, just purely because we've got a bit of traffic up there. We have to do here what we did previously throughout all of this rally, just see where the levels want to develop. Maybe we get something, again, 94, 95, just against that prior high, so keep an eye on that. You need to do the exercise of building the levels as we go. So if it holds 29.80, on a test, that's going to give it probably a springboard to go and have a look at those highs once again. Euro, that's having a little bounce as well, up testing, going through the 109s again. We had a pretty solid hold down here this morning of the 108.30s. We had a little nick under yesterday, but it got back up. We're still deciding what we're doing with this zone. Okay, so here we are, you know, a week into trading it, just over a week into trading it, and we still haven't made a decision about it. This is why I say about this zone, you can trade around it intraday, that's fine and dandy, but look at it from a longer term perspective. It is a pivot area, okay? It needs to be above or below it. And if you get in holds above it, you've got some confidence to be long. If we're holding below it, you got some confidence to be short, okay? But when it does finally make its decision, it's going to move, you know, and those moves can be pretty big. So another move into 109s. Let's see where it goes. 109.40 is still the level above. We had a bit of secondary resistance coming in after that test. So look around here, the 26, 27 area. But 109.40 is the main one. 109.60 is the one after that. And just to show you why, let's see if I can get it here. 109.40, it's an old level. We've had plenty of traffic around there, but importantly, it was resistance after it broke. Okay, same as this, the 109.60, another support and resistance area. Then we broke it and it became resistance. Okay, same as the 110. This is why these levels are important on the way back up, because if they had something here, they're probably going to have a say when you come back to them later on. 110 is obviously going to be the bigger one above here. But if this is going to rally, and I said this morning in our chat room, if it feels like it needs something extra now to get this going, okay, this might just be a reaction to something. I'm still looking to see if there's been any headlines out. This might just be a reaction to something. So if it doesn't get up and test these highs, or if it doesn't fails, then whatever news has driven that isn't enough to break us up through it. But let's see, a retest and hold 108.70 again would look a bit more bullish and swing the pendulum that way. Right, James says there's agreement for the German debt break according to Handelsblatt. Okay, there's your reason there. I'm not sure if that's behind gold, but stranger things have happened. Thanks, mate. So there you go. Agreement on the German debt break coming, according to German press. Right, so that's the euro for you. Dollar yen, not doing an awful lot. it did, when we got those wage headlines, it did rally a little bit. The market taking those wages a little bit on the soft side, so negative for the yen, but had a small push up through towards 149. That's falling out of bed now. This 149.20s area is your important level at the moment. It's the old 50 fib from the September move that I've got on my chart. It's a bit of a level on its own around here. Again, one of those times where the fibs matches up to levels previously. So that's your key level for any rallies from here on out for dollar yen. We're still building support off of this 147. So this is still potentially going to be your key level down here. If we're going to break this trend from the year, then we need to start, or at least keep finding support on dips. So a dip to 148 that holds, that'll be 3 steps up. And then all of a sudden we've got a short-term uptrend. That will give it the legs to potentially then start taking on some of these higher levels, like the 38.2 of the whole fall, as I remarked yesterday. Look at euro dollar from 112, because you can use the patterns there to decide when something's bottomed for this one as well. You know, prices, they all tend to do the same thing, follow the same patterns. If you can identify those patterns, then you get a good heads up on how to trade it. Dollar CAD, still stuck in the range. I was looking to see if we maybe got to move up to the top end, 44.65, but we ran out of puff just into 50s. So we're just back in the malaise at the moment. No real interest of trading anything in the middle here for the moment. But as you can see, it's pretty much ignoring all the tariff stuff and to and fro between US and Canada at the moment. Dollar MEX, that's going very nicely for my shorts. I've just taken some off again of my short position into 2001s, 2001.50. I got some away. We just got a bit of a level here, just above the 20 figure. I'm a bit skeptical about what happens at the 20 figure. Personally, obviously, I'd like to see a break being short. But I don't have big conviction that we're going to see one. If we bounce from here and a test of 20, then we might see a bigger reaction, a bit like what we've just seen in gold, but maybe this one pushes back up, maybe to 2030s, something like that. Because if we do hold here, then that's going to confirm the range and these range extensions. Conversely, if we see some a bounce from here and see solid resistance into the bottom of the blue zone, that's going to be pretty bearish, and that would potentially set up a break through the 20 level. So a bit of a big moment for dollar MEX on this one. Euro sterling, that's bouncing back smartly. Did look like we were failing. We had resistance coming in the bottom at 84s. GDP data from the UK helped this one along, and obviously now it's been taken over by that Euro news or German news. So we're back on the uppers with this. I did think we might get a test of this 84.60, which is a pretty well-worn level as well, but we didn't. So keep an eye on this news, this Euro news. If we can't break out this high, that would tell us that the market is happy with what it's traded around this news, and we still will need something more to get this kicking higher. There's still a bit of hopium in this Euro trade that all this fiscal stuff is going to lead to changing fortunes in the Eurozone, but I'm not so sure. I'll believe it when I see it, put it that way. Right, don't forget, folks, if you've got anything you want me to look at, pop it in the chat here. Don't have me waffling on about my own stuff. I want you to give me something to talk about as well. Aussie Kiwi. Oh, more than happy to go with Aussie Kiwi, Mike. Seeing as I remain short in this one. Not that there's much to talk about. We're stuck again in this 110, 110.30 range. Looked like we might be trying to sneak out the top. That failed, and now we're back in the middle. Are you in any position, Mike? I'm short from up here. mid 111s. So I'm happy to still stay on the short side, but I really want this 110 to break. If we get that, I think it changes the complexion a bit, and we should at least get a move back down to these levels, 109.50, low 109s, if that happens. So as much as it's doing the same thing as we did back here in January, it's lasting a bit longer. So really, whichever way we break out of this, that's going to be the likely direction for the several sessions or however long after that. You're long from 110. Yeah, good level, mate. Good level. You will want this 110.30 to break. Get that, you're probably looking at 110.50s pretty quickly afterwards, and then see what happens from there. But take your profit, I think, mate, when you see some. Not all of it. You take some partials against this 110.30, just in case we don't break, as we haven't several times already. So this is your Antipodean euro sterling. So don't expect much very fast from it. But yeah, I'm on the other side, so I'm looking for a break of that one. We'll have a quick look at dollar Swissy. Not much change from yesterday, just creeping up still. The dollar's been a bit better of late. I'm not going to say it's the end of the bearishness for the buck, but we have seen a little bit of relief coming in the dollar, as we saw yesterday. Cable, euro, just looking a little bit softer. This one heading up a bit as well. No real move on the Putin stuff either here. So from a risk perspective, it's probably keeping an eye, but not seeing too much to react on for that side of things. Where else? Let's have a look at what's going on in stocks while we're here. Just going to look at this cash market first before I get into there we go, before we get into the other stuff. So we have had a little bit of a washout yesterday. Still happy to make lower lows, which is not good news. That's not what you want to see in a market like that. It still makes it dangerous for longs to try catching that knife, but we are getting down to some bigger levels down here, the 61.8 of this rally from August. So it held just ahead of there. It couldn't quite get down to the big figure or that fib there, but it is a decent area, as you can see on the way up. It was a sticky point twice before a break, just a minor sticky point because the pullbacks were very shallow. Then we had a bit of messing around here. So this is, again, it's just one of those areas that's become a bit of a pivot point. So if we're holding it and you want to catch a knife, that's, you know, a reasonable place to try it. But if we're breaking below and holding below, then that's when you've got to be careful, because that's when this move is likely to keep going. But the bounces still are looking very weak. But as I said, the tax news, we get some decent tax news. It's big tax cuts. That might at least put a bottom in the pair, wherever it is at the time. But the key from that point will be to see whether it can stay bottomed or whether we're just going to get more dead cat bounces. But this is going to need a significant change in sentiment right now to get this moving back up towards the highs. But, you know, we've had these pullbacks before, so they can happen again. This one's getting, at least in the shorter term, getting pretty sizable. And don't also rule out maybe a little bit of a flush moment. It's pretty calm and composed at the moment. But if people get too worried about stocks, you know, if you've been riding stocks for the last 6 months, a year, you're not worried about this pullback. Okay. But if it does start, you know, accelerating a bit, you're going to find a few more short-term longs thinking about taking profit, and then you get a bit of a snowball effect. So I wouldn't rule out seeing a bit of a flush move, but as I say, it looks calm and composed pretty much at the moment. Quick butchers at yields. We did have a bit of a fail in the end, had a little bit of a poke above 434, but it's pulled back a bit since then, but the dips are pretty shallow. So we are getting into the Fed orbit slowly but surely. So we're going to see the market moving to trading that at some point. So we might just see a little bit of calmness returning to the bond space, the treasury space, as we get into the Fed. No one's going to want to get too far out their pram in terms of positions. Oil still faffing around here. 68 on the top, 65.20s on the bottom. See what happens with the zone. But again, I'm not sure what this does. Well, I know what it should do on any resolution in the Ukraine. That would likely mean Russia oil coming back to market, which is going to add more supply while there's a lack of demand. So on that basis, it should head lower. But in a wonky way, I wouldn't be surprised to see if it's rallying on a better risk outlook, because some of the market might see that as a bit of a turning point for the potential for growth to come back in, and money that's being spent on Ukraine would be spent on fiscal measures. So my head says one thing, my heart says another thing in terms of which one this may go. Obviously, let me know your thoughts if you think what you think oil might do on such a situation as peace in the Ukraine. Right, anything else while we're talking? I know some of you guys and girls look at silver. That's rallying as well, staying alongside gold. I know Dow's looking at the 36 level as a possible target, but obviously we've got this level up here at 35, these prior highs to contend with if we keep this rally going. So don't rule out a pullback on this. Again, if we get some risk on headlines from the Ukraine, we might see a bit of a pullback in metals, particularly gold. Not that it's looking like it's pulling back too much at the moment in gold, but we'll see. If you don't get a big move, what's happened now? If we don't get a big risk on move, i.e. precious metals dipping on any sort of ceasefire or Ukraine peace, that will tell you a whole different story about what's going on in these precious metals, and then maybe we're still going to keep the bid and keep on climbing. What's coming up later on today? Not even looked at that. I don't think we've got an awful lot coming out today. We have the flash Michigan numbers. That's about it by the looks of things. Yeah, that's it. Bit of data out from Canada. Not everyone's going to pay much attention to that, but yeah, just keep an eye on these Michigan numbers, because this is one of the data points that have got the sentiment turning a little bit sour. Seeing some lower numbers in these sentiment datas, the Michigan, the Conference Board consumer confidence, but that's also been coming with these higher inflation numbers that have been happening, quite some jumps. And I know some people are making a case for the people who are being polled and splitting them between Democrats and Republicans. It doesn't really matter. People are people. They either think inflation's going up or it's going down. And on balance, at the moment, the majority of people think inflation are going up. So the Fed aren't too worried about consumer inflation expectations. They're more worried about market inflation expectations. But if this continues again this week or today, then it would be something that the Fed will start to take consideration of, particularly as we're getting up to that next Fed meeting. So as you can see there, these inflation expectations ballooning a bit. So keep an eye on those numbers as well. Right, if you guys haven't got anything else, neither have I. Anything else you want to ask me, those of you in the chat room can come and ask me there, but we'll call that a week. Thank you very much for joining me here, keeping me company while I take the reins while Kay's off. I'm going to try and organise, perhaps for next week, a couple of guests to pop in and share their words of wisdom with you all. So I'll get to that over the weekend. Thank you, everyone. Catch us on Face in about an hour's time, just under an hour. Have a great weekend. Trade safe. See you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.